Hi everyone, welcome back to the Accounting and Tax Podcast, a podcast provided by Alamir CPAs and Associates. My name is Haas, a partner at the firm, and today I'm gonna dive into the cash and cash reserves. Cash reserve is very important because cash is exactly what you need in a time of crisis. If business is going well and you're collecting cash, you're tempting to have a lavish lifestyle and buy whatever you want and spend money as you wish. But cash is very important for unexpected, and as you know, life happens. You never know what's going to happen. So cash reserve gives you the safety net and confidence to basically have a breathing room, and instead of reacting to the crisis, you can make an informed decision. Emergencies, economic downward are the most two important factors of reason that you need reserve. Right now, we have lots of clients that importing uh, material from China, and because of tariffs, they cannot even bring the shipment here. Uh, the suppliers holding the shipments, so they cannot sell to their own customers. So they should have a cash reserve, and they are. So they are planning accordingly. A couple of months ago, there was a fire in California, and lots of people lost their business. So the ones who had their cash reserve ready, they can start rebuilding and making money again. But the ones who didn't have a cash reserve, they have to go and apply for a SBA loan. It takes a longer period of time for them to rebuild the business, and they might lose their competitive edge at that point. That's why all of our clients that work with us, we advise them to basically have the cash reserve and make sure they are start building it. So within the next 10, 12 months, they should have a good, healthy cash reserve. If something unexpectedly hits you, you're gonna scramble. You're gonna take on a high interest loan, or worst case scenario, you're gonna delay the payroll. That has a consequence of a lawsuit, especially in California. And even worse, you might lose your business. So we don't want to put you in that position. So you should have your cash ready. The mindset needs to shift for all the business owners. Profit is it's good on paper, although you should have it profit to bring cash in your business, but it's not a tangible number. However, cash in your bank is a tangible. So if you don't have enough cash in your bank, you cannot pay your bills, you cannot pay your payroll, you cannot pay any bills. So you might go bankrupt. Although you're making lots of money on paper, you might go bankrupt because you're not collecting fast. Remember, cash is the king. The rule of thumb for all the businesses is to have up to 6 months cash reserve. However, for if you are in a high risk industry, or you think the market's gonna crash within the next few months, maybe go in the like a 9 months cash reserve. But 6 months is uh, the rule of thumb. And also remember, it depends on your industry. If you are in the service industry, 3 to 6 months is the ideal cash reserve. However, if you are in the retail, manufacture, construction, you have a higher cycle of sales, and that means you're gonna collect your cash not in 30 days, but probably in 6 7 months. So for those industry, you definitely should have a cash reserve between 9 to 12 months, so you can operate your company while the government or whoever contract you for construction pays you. Remember, never ever ever tie your cash reserve to any stock, any real estate. You want to have access to it fast, within days, not within weeks. You don't want to lose in a stock market, basically. Make sure you keep your cash in a high yield interest saving accounts or money market. Make sure they are liquid, and make sure you're not touching it. For example, like a CD or certified deposit accounts, usually you tie your cash to between 3 to 9 months with the bank, and you don't want to do that. Otherwise, you're going to pay a penalty to the bank. So you want to make sure you put it on the money market or any saving accounts that you can just transfer it from that account to your checking account within like 24 hours instead of waiting for the bank to get the approval. Short term saving is different than your reserve cash. A short-term saving is for your anything that you already plan to purchase, like equipment or pay your taxes, anything that in the cycle of business, and you know you're gonna spend money on that. True emergency fund is extremely, or it's restrictly for anything unexpected that you don't have any plan for it. If the fire hits, if the you're gonna have it hit by tariff, or you never know, you have an earthquake. In California, we have earthquake every 5 minutes, so uh, you never know what's gonna happen. So cash reserve is only for those emergencies. And remember, cash reserves always need to be based on your fixed cost, not the variable cost. Variable cost will change as your sales change. However, fixed costs like your rents, utility bills, payroll, these are the one you have to pay no matter what. So remember to, I mentioned you need to have a 3 to 6 months cash reserve minimum. So make sure you plan it based on your fixed cost, not based on your variable cost. You basically need to have 1 to 2% of your revenue saved on your cash reserve. The smartest way to do is to set up an automatic transfer from your checking account to your saving account every month. So by the 15th of each month, make sure your automatic transfer like 1 or 2% of your volume of your revenue volume into your saving, and that's you have to treat it like the fixed cost. Uh, it's you have to build it in your budget. You know it's gonna happen on the 15 or 13 or whatever day you want. You know that's going to happen, and that's the smartest way to build up the cash reserve. uh, Never rely on your memory to transfer, and never postpone it. Just make sure you have a discipline on that. It is definitely okay to dip into your reserve, but in the emergency, as I mentioned, or if you have the very good opportunity for investment. Never ever touch your reserve for poor judgment or bad budgeting. Make sure uh, to touch your reserve only in unexpected situation, or if you have like a really good opportunity that you can profit from it. So uh, that's the only situation you can touch your reserve. Otherwise, if you made a poor judgment or you had a bad budgeting, don't rely on the cash reserve. Just think that that's a do not touch fund. If you touch your reserve for any situation, make sure you have a plan to rebuild the cash reserve. So if you have a good opportunity for the investment, make sure a portion of that revenue that's coming from that investment is goes toward your building your reserve. However, if something happened or unexpected happened and you like the tariff or the fires, obviously you cannot build up your cash reserve right away. But make a plan. Okay, I'm gonna rebuild my business, but within a 6 months when I'm up and running, I'm gonna start slowly build up my cash reserve, and make sure put that in your budget. The common mistake all business owner makes, including us, it's waiting too long. You want to make people are waiting. Oh, I need to have the profitable of like be $10 million business until I start creating my cash reserve. That's a mistake. Start right away. Start small, 1%, half a person, whatever you can. Just be have a discipline on it and start building a cash reserve. If you wait too long, you never know what's going to happen. You might hit by earthquake and you're out of cash. The strong reserve gives you the leverage. If you have a really good opportunity of buying a business, let's say, when you have a reserve, you can negotiate better. You can make an offer right away, so you can be profitable faster. Or if something happened like tariffs that we are all talking in these days, if you have a cash reserve, you can plan for it. We have a client right now, they're bringing everything from China, and because they have about $600,000 in cash, they are not panicking. They are just waiting for the tariffs to slow down. They are dipping to their old inventory for the time being. But if they didn't have cash reserve, they were like they pay all the money to bring the inventory in the US and paid, and they might lose money over the time. But with having a cash reserve, they have a leverage of waiting. The one piece of advice me as a fractional CFO will tell to all my client is Start now, even small. Don't wait too long. Have a plan to build up your cash reserve for 6 months at least, and that gives you the peace of mind, flexibility, leverage. If you wait too long, you are playing with the fire. With that, my name is Haas. Please reach out to us with your question at helpless at alamircps.com. It means a word to us if you drop a comment, like and subscribe, and catch you next week.